bills or coins in mail. That rarely happens. Okay, so one copy of this list that the person created along with the checks is given to the person responsible for making the deposit, and the second copy is sent to the accounting department, who's going to put it into the books. So see, already two different copies, so there is no it makes it very hard to steal. And it's saying in some, it'll actually make a third copy, and the person getting it in the first place, person getting the mail in the first place, will keep a copy. Okay, so again, it ensures that separation in duties. All right. By the way, if any of this is confusing, what I would suggest is going back, rewinding a little bit, and listening to what I said again. Pause, rewind, forward to understand it better. Okay? Procedure 3. Daily cash proof. What daily cash proof is, you check your till, your cash register on a daily basis to see how much cash is short, how much cash is over. All right? In this section, we're going to learn about a new expense account / revenue account. We're going to learn about an account that could be an expense account or it could be a revenue account, depending on whether it has a debit balance or a credit balance. Okay, so we'll look at that. And that's going to be this cash short and over account. Okay, if cash is short, we're going to have an expense. If cash is over, we're going to have revenue. All right, so let's look at this. So it's talking about a figure on the next page, but here's what it's going to talk about. On June 6th, the cash is short 30 cents. Okay, and it also tells us cash is always counted. It starts with a $150 cash float. That's how much money is put into the cash register for a certain business, and then more cash is put in as customers give money. Okay, so let's see what happens. So on June 6th, it shows that this much money came in. This much money was in the till at the end of the night. That's $1,347.50. This is how much was taken out of the till for the next day. So the next day's till can start at $150 again. And that's how much was deposited. Okay, now if that's what was deposited, it's talking about, okay, all my sales slips, so all my cash slips add up to $1,197.80. Okay, and cash is now short 30 cents because what we deposited was this, and what we should have had was this. So you see, we have 30 cents short. Okay, let's take another example on June 7th. Now, once we have all our money, again, we subtract 150 because that's what we want to leave in the cash register. That's what we started out with. That's not the money we got from customers. That's the money we started out with. Now we're left with this. And how much should we have had was this, based on all the sales slips, 1,215. So now you see we're over $1. Someone just accidentally gave us an extra loonie, or this business an extra loonie, so we're over. Okay, so how do we record this? So here's the transaction for June 6th. We received this much cash. Okay, so that number is coming straight from right there, 1197.50. This is what we should have had, because this is our sales, and the remaining amount is our cash short. Now notice we're debiting this because it's an expense. All right, expenses increase on the debit side. Now in the second one, we got cash of $1,216.73, and we should have had this much, $1,215.73. So because we were over $1, that's revenue, we're gonna credit this account because revenue increases on the credit side. Remember, again, this account can be expense or revenue, okay? And it's gonna get a credit of $1. So if we're debiting 30 cents here, crediting $1, it's gonna end up having a credit balance of 70 cents. So right now, it's a revenue account, okay? And that's what it talks about here. So when the income statement is prepared, the cash short and over account may appear either in the revenue section or the expense section, depends on the balance, okay? So that's that. Here we go again. Cash shortages are recorded as debits and cash short and over. Cash overages are recorded as credits and short and over. Okay? And I think that's the end of, maybe there's a little more. You don't have to worry about this. Don't worry about this part, other income, okay? And so you just should know that companies do two separate things. Different companies will do different things, okay? Some companies will absorb all the shortages and overages. That means they'll pay for it all, and they'll keep all the money if it's over. They'll pay for it all if it's short. Some companies will deduct the shortage from the cashier's pay. That sucks, but it happens. All right. So it all depends on the company. Sometimes they may do a little bit of both. You never know. Okay. Some companies won't even tell the cashier if they were over or short. The cashiers are figuring out if they're over and short. Okay. So different companies will do different things. So you should know that different companies will do different things. There's not just one way. Let me go back to when we talked about sales slips. I think I confused you there a little bit. Now, I have worked for many businesses as a youngin. When we received cash, we didn't have sales slips. The way it was, the way they controlled it was they just had the last, at the end of the day, a big slip would come out and it would have the cash, how much cash we should have received, okay? And that's what it talks about in here is, let's see, I'm gonna point that out to you. So this thing, cash register tape, okay? So we had a cash register tape, and that register tape tells you at the end of the day how much cash came in. So we didn't have sales slips. We didn't have someone sitting there and adding up every single sales slip to the cash register tape. We didn't have that. We just compared our cash register tape to the amount of cash we received. And the control would be that only one person would work on a cash register at a time. So that cash register tape total for all the cash that should have been there has to be there unless the employee took it, right? So that control was not enough in this, in the sense of this book, but it was enough for that business. That's what that business chose to do, okay? So not every business will have a sales slip, but for the purpose of this book, we're gonna learn how this works, okay? So if you have any questions, you can ask me, or you can try to rewind a little bit and listen to it again, okay? So that's where we're stopping at the end of procedure 3 for this video, okay? Hope this is working out well. We'll talk about it more in class. Take care, guys.